Hello, hello. How is everyone doing? We are here back in Los Angeles and we are streaming. It was quite a fun event last weekend, but here we are in the markets. Futures last night was looking pretty nasty. Like it was not a good night at all. But hey, I mean, if you woke up this morning, you're looking pretty good. If you're long stocks, I mean, everything else is a lot of stuff is up, but not everything is up, unfortunately. And one thing that I noticed that is pretty much not sticking is crypto. I mean, crypto bottomed around like 75K. And here it is. It's at 78K, but I thought we were going to get a little bit more of a bounce. We'll see. I mean, it's only been a couple of hours. It's only been 12 hours since crypto bottom. So yeah. And what's going on, Mr. Patel? How are you, sir? I don't know. I can't really answer that question. I'm pretty sure I'm not. I'm pretty sure I'm not. I have kids, right? So I don't know. I don't know if that's necessarily the case. But what is going on, guys? I apologize for being late. I am honestly having some camera issues, so I need to figure this out. I don't know why this is not working. Maybe it's something USB port. We need to call an IT guy, specifically someone with 15 years of experience to fix this thing, because this is ridiculous. And I am not the guy. I am definitely not the guy. Ticker TapX. How are you, sir or madam? I actually don't know if it's sir or madam, but what's going on? Yep. Oh, thank you very much, Dave, for coming on. Yeah, it was great seeing you as well. I saw a lot of folks there in New York, and we're going to do a little bit of some solid talk at the end of it. But I am literally going to try to cram this in to the next 30 minutes because I'm late, because Amit and a bunch of guys are going to do the Palantir stream, and I don't want to take away from that one. So let's try to get into as much as we can, because that is definitely going to be a market mover in my opinion. And I got to give out some thoughts here. So I originally did have a few things that I wanted to discuss here for the show today. I wanted to discuss the crypto slaughterhouse. Basically, you know, what does Kevin Warsh mean? I think I'm really going to focus on that segment the most, because when I was talking to people last weekend, which I really appreciate meeting you all, I really appreciate meeting you all on Sunday and also during the weekend, a lot of you guys and girls. And I mean, the community is just so massive. Like I didn't think I'll have like some real talk about that one later. I'm going to get into like who Kevin Warsh is and like what his views are here, right? Because there's a lot of questions as to like, you know, what's the difference between Kevin Warsh and Powell and how it affects everything. I'm going to get like a little technical with it, but I'm going to try to explain it to you guys as best as possible to understand, like, look, why is crypto down, right? And why is it down like 15K since they started talking about Kevin Warsh, which really came out of nowhere? And why is everything not down? Why are certain things up, right? There's a little bit to do with that one, but mostly focusing on the monetary standpoint. And I mean, Chris said he's actually on his way home. Yeah, no, I tried to do that like a million times, dude. Are you serious? Did I try turning it off and on and off? Like, come on, man. That's IT 101. Of course, I tried to do it like 20 minutes. I even switched out the battery. Anyways, yeah, this guy's on his way to the airport. I'm actually going to try to see if Chris wants to do an episode tonight, because that'd be pretty awesome to catch up. Save us, Sam. Dude, I'm trying to save myself, and it's not really working out too well. So we'll see what happens. Sam saw me in the car. Chris, oh, wow. All right. So wait, so you're both messaging and driving at the same time? That's kind of scary. Good luck. But anyways, let's get into it. We're going to talk about Kevin Warsh and try to do my best explaining for that in the next 30 minutes. I got to look a little bit into Robinhood. You know, honestly, it's been so busy since I got back. I have no idea why this is down right now. So we're going to dig a little bit into that together. ZETA, guys, I'm bullish. I mean, like, I'll try to do a little bit of that because I'm a very shortened period of time. I wanted to dig into some ONDS, Kraken Robotics, and more of EOSE. I was talking to a few of the fellas and gals about that yesterday, and these are pretty interesting. I want to dig more into that one. Maybe I'll spend some time to do that in a stream later on today or tonight, like a late night stream, see if Chris is available. If not, I'll probably be on just like literally just deck it out. Like just, I don't know. We'll see. I'm going to do that after the kids are asleep. And then some solid talk. So let's get into it, guys. Now, what is happening with crypto? Well, first, let me share a crypto chart over here. I mean, I don't think I really need to share a crypto chart, but I mean, guys, this is brutal. This is seriously brutal. And the worst part about this is that it does not find a bottom. So if we zoom out on the monthly, like this is nothing, right? This is nothing on the monthly. Like let's, if you're a crypto bull, let's keep the big picture here, okay? You're fine. All right. Like if you've been long crypto since 2017, like you're fine. You're still a 3x, even if you bought like the tip top in 2017. Uh, kind of like how I started buying crypto, but you're fine, right? But if you bought crypto at 120K or Bitcoin 120K, like you are not doing good. And it comes to question like, did I make a mistake here? Should I not have bought crypto? Was it all hype? Did I get stuck in the hype? Did I believe in Tom Lee too much? Am I blaming all my problems on Tom Lee and all this crazy stuff running through your head? But guys, the best thing you can do is build your own conviction when it comes to this. And I'll kind of explain a little bit at why I think it's down. Honestly, I think this is more of a liquidity factor. BMNR is just it's just a falling off a cliff. Like this thing does not stop going down. But arguably, guys, I mean, if Ethereum is down, BMNR is going to be down. Like there's just no way to avoid that one. Why can't I get like this chart to work correctly? I think I got to do this auto fit one right here. Yeah, BMNR is just not going down. But yeah, like I mentioned before, if Ethereum is falling off a cliff, this will continue to fall off a cliff. And let's look at how low Ethereum is since its recent all-time high. This thing is down. Like, guys, this is like 56% down. That's crazy. What happened 3 minutes ago? I want to move on with the segment, Trump. What are you doing? I want to do this show, Trump. Come on. But I bet you this guy tweeted something. I bet you this guy tweeted something. If he did it, then like probably something even worse. Let's go ahead to the trusty, rusty, most true factual news on the planet and look at X. I'm just kidding, right? X is like Wikipedia. Like it could be false. Trying to see what it could be. Oracle turns red. Oracle's get down to 7 o'clock. Now I'm trying to look, guys. 1 second. I'm guessing because if I look at the chart, this is how I usually try to find out what news is going on, what's bringing the market down. I look at the intraday chart over here, like the chart like that's during the day, the shorter candles. I try to see around where it's top and where the big candle was. It was right here. Actually, let me go down to the 10-minute. Yeah, it started falling off a cliff like around 2:10 p.m. So if I look at, I'm looking at Twitter right now. So I'm looking at my news layout over here. I reviewing allocated public office, Met Police. I'm looking at Twitter right now. I'm trying to see. I knew it. I knew this was going to happen. I kind of figured that something like this was going to happen. So I'm going to replace my screen with this one right here. This is what I would guess is the volatility we're seeing in the market. It looks like the Trump's feud with Powell and DOJ probe is blocking Kevin Warsh's confirmation as Fed chair, risking interim leadership vacuum and delaying Trump's push for rate cuts unless a standoff is quickly resolved. I think this probably has a lot more to do with it than anything. I did see this news up here that, where was it? U.S. Treasury Secretary says it expects to borrow 109 or 574 billion in Q1. I think that they have to refill the balance sheet, the Treasury, the TGA, the Treasury General Ledger. Treasury General Account. And in order to do that, they have to issue more treasuries, which means that they need to borrow money. So that's pretty common to happen. That happens all the time. I think it's probably the thing with Warsh, because I've been noticing over the weekend that the poly markets for the nominee, right? Like he announced that it was Warsh, right? So why isn't this 100%, right? I've noticed that. Like I was like, why isn't this 100%? Like he nominated Warsh, so what's the deal here, right? So I think Warsh is going to be it. So I'm going to do like 12 million, and I'm going to do. Nah, just kidding around. I'm not going to bet this crap, guys. I'm not gonna, that. You know what risk that is? $12 million to make 2%. You're betting to make 2%. So if I put $12 million in for yes on Warsh, I could win. No, come on. I can't win $2 million if I put that much in. It's 98 cents. It's 98 cents. Nah. All right. What if I said no? Like, I wanted to say no for Kevin Warsh. Like, I don't think Kevin Warsh is going to become the nominee. This doesn't make any sense. Why is it 1 million? Because I'm betting no, right? And it's 2 cents, and if 2 cents goes to $1, that's a 50 to 1. And if I put 12 million, which I don't have $12 million, I wish I had $12 million in cash. I'd buy a lot of ZETA. But yeah, that'd be crazy. Now this should actually be close to like $100 million or something. No, actually 12 million. Let me round it up. It should be like $50 million if I did that. So times 12, 50 times 12, $600 million. All right, let's try. You're right. Let's try it out. Let's do $12 million on Warsh not getting. And if I win, then I'm going to invite everyone on a boat. I'm going to buy a boat and I'm going to invite everyone on it. All right. So let's go. Let's trade. Oh, I'm not logged in. I guess I can't do it. All right, cool. So it looks like the markets are kind of recovering off of that a bit. I mean, we're still 85% up on the Qs, so I don't think whatever happened is actually real news. But let's go back to the Warsh talk, because we only got 21 minutes left until Amit goes live, and I don't want to take away from like the crazy earnings that a lot of people are looking forward to. So what's happening here? Trump nominated Kevin Warsh, as a nominee for the successor of Jerome Powell. Let's take a step back here. Who nominated Jerome Powell? It was Donald Trump that nominated Jerome Powell during his administration. And who was the other choice between Jerome Powell and the other nominee? It was Kevin Warsh. Kevin Warsh was the other choice. And Trump chose Jerome Powell, mostly because, well, Trump thought he was a dove, so he chose him. And we did have a little bit of a rate hike, actually, when he started, which Trump got very pissed about. But eventually he started cutting rates, and he was very much into being more appreciative of cutting rates, right? He was really focused on the federal funds rate, right? So the federal funds rate at the time, let's actually bring up a chart of the federal funds rate over here. And I'm going to share this screen, and then we're going to be looking at Fed funds rates in St. Louis. And I think it's, the Fred. The Federal Reserve Bank of St. Louis. All right, so back when Jerome Powell, actually, when was the exact date Jerome Powell started? Jerome Powell started on February 5th, 2018. Okay, yeah, so that's what happened. Yeah, so February 15, right here. This is when Jerome Powell started. So Fed funds rates were around like 1.25% to 1.5%, and he was arguably very dovish, right? Not very dovish, but he was pretty dovish, right? Because Trump wanted rates low. But let's be honest, rates were below 2%, so like rates weren't like such a massive factor when it came to how we're going to do interest rates. So as Jerome Powell started, he was competing as nominee versus Kevin Warsh, and he chose Jerome Powell. And if you guys remember what happened over here, you can see in this chart over here, when Jerome Powell started, he actually started hiking rates, right? And when he started hiking rates, the market actually like gradually like went down, right? And we had that famous Powell pivot where he hiked rates like 2 to 2.25. And he basically had an emergency meeting. The market was down like 18%. And he basically said that he's no longer to cut rates, right? So rates eventually came down after that. And then fast forward, we had COVID, and then COVID happened, and he injected trillions of dollars into the system by buying $120 billion of mortgage-backed securities and also treasuries. And he did that for like 2 years, right? And he cut rates to 0% interest rate policy, or 0% interest rate policy, ZIRP, right? The famous ZIRP. And stocks went to the moon, and companies were just like levering up by just borrowing a crap load of money at like near 0% rates. And everything went up until Jerome Powell said, I'm going to slow down the buying. And he they were still doing quantitative easing, or Q infinity is what everyone called it. And then they started to reduce the amount of bonds that they were buying off the open market. I mean, in a second, I'm going to explain that, but I just want to continue with the story. And then he hiked rates to 5.5%, which is what we just saw from 2022 up until the end of I think it was 2023, when he did his last rate hike in the fastest pace ever in human history, or in the history of the Fed. And he basically let bonds mature and roll off the balance sheet. So he wasn't actually selling bonds onto the overnight markets. He was actually just letting them mature and not buying them back or renewing them, whatever it is. And I'm going to explain again what that means. And fast forward to a year ago, started cutting rates, and just recently started to buy, I think it's about $30 billion in treasuries, and I believe mortgage-backed securities, or maybe he hasn't even started that part yet, but treasuries, right? So we're at all-time highs in the market, but crypto is down. Now, why is crypto down? All right, so let's go back a little bit again. What does it mean when the Fed lowers rates, right? So you have a rate of a 25 basis point range, and the 25 basis points is basically like the floor. So the Fed is the buyer of last resort whenever it comes to bonds, right? Because in the overnight markets, or overnight repo markets, you have a lot of buying and trading of treasury bonds between banks, and the treasury basically sets the floor of that by being the buyer of last resort at 2.25 right now it's 3.75. Yeah, 3.75, and then become a seller of last resort at the lower end, 3.5%. Now, excuse me if I'm like a little bit off by that math, but that's basically like the Fed is a buyer of last resort and they're a seller of last resort. So that way they keep the Fed funds rate between 3.5 and 3.75, so a 25 basis point range. And the reason why they have to do that is create stability in the overnight repo markets, because like we're talking about trillions of dollars over the course of a year that gets traded amongst banks for that minimal basis points of basically creating liquidity in the system, trading between banks, and so on, whatever it is. So what happened in 2020 was that the Fed was doing quantitative easing. They were going in the open markets and they were buying $120 billion of mortgage-backed securities as well as bonds on the market. And when the Fed goes in there and they buy $120 billion of it in 1 month, they're basically printing money to buy these bonds on the open market. And they're basically taking bonds out of the open market or letting the Treasury borrow more money, and they're putting more money or more liquidity that was just printed into the system, right? So this is a big deal. I think this is a lot more important than the rates themselves, right? So the rates themselves just creating a floor and a ceiling as far as not getting that range go crazy. We had crazy situations happen with the overnight repo markets and the reverse repo markets back in like the mid 2010s, which is why they had to create a reverse repo market. But the overnight repo market actually exists for quite some time. That basically all got crazy in like 2008. So anyways, what happened was that you basically had the Fed printing money. Now, they weren't like, here's money in the open market. They had to buy bonds in the open market. Like they were the buyer of last resort in the open market. And basically all these banks were selling their bonds to the Fed, and they were getting all this money at such low rates, like near 0%, right? Because interest rates were 0%. So banks were just like, this is free money, right? So I can basically I can borrow money from you. I can give you these bonds as collateral and you can give me money. And in a year, I could give you your money back and pay you back and keep all the interest that I made off of whatever I borrowed from you, right? Like that's crazy. Like that's basically the equivalent of like saying, I'm going to sell you a Tesla, right? Or I'm going to sell you a house, and your house is $750,000. Okay. And actually, let's say your house is $1 million, right? And in a year, your house is worth $1.1 million. So you had to go to the Fed and borrow $1 million to buy the house, and then pay the Fed back $1 million later. You just profited 10% off that. Now, these banks aren't making that crazy amount. When you're talking about hundreds of billions of dollars, these banks make a lot of money even off like 10 basis points, right? So this was happening in 2020, 2021. This is the reason why stocks went to the moon, because it was free capital. It was free money to borrow for these companies, for these banks. These banks got basically free money, and then they loaned these money out to these companies and these SHIT codes for very low rates. So it was like, you know, guys, let's borrow all the money we want. And stocks went to the moon because it was like, it doesn't matter how much debt we have, guys, because we could just buy our way out of debt, right? That's why stocks went up in 2020, 2021 to the moon. And everything crashed because the Fed was like, we're no longer going to put liquidity in the market. In fact, we're going to be letting liquidity expire on the market. And then at that point, it was like the free money's gone. So people are like, I don't want to borrow anymore because I don't want to lose money. Like, because if you borrow, instead of borrowing $1 million and being able to profit $100,000 after you give that money back to the Fed, which is the original million, instead, housing prices were stagnant. Assets were going down. The stock market was going down. No one wanted to borrow because it was like, if you borrow, then you borrow to buy stocks and you were losing money because the stock market was going down. So therefore, I'm not going to borrow. And then rates went up, right? Rates went up. Right? Like the mortgage rates went to like 7.5% to 8%. We had 5.5% interest rates and so on. Like no one wanted to borrow money. They were very stingy. And instead of borrowing money, they needed more capital to fund their businesses. So what did they do? They cut headcount. They laid off a ton of people, and you saw massive layoffs that are still continuing today, arguably, because we don't have massive quantitative easing happening now. And that's scary. That's scary because we got so used to the free drugs for 12 years since 2008 or 14 years. And now we don't get free drugs anymore to pump our bags and to hire all these people and not pay any interest or whatever. Like that stopped happening out of nowhere. And it was like everyone freaked out, right? Businesses freaked out. Companies went to zero. Companies were near zero. And companies that were a really good idea growing very quickly, the models changed because now they can't borrow money anymore. Now they can't grow as quickly anymore. And now they're not as profitable. So everyone sold stocks in 2020. This is the reason why we had a bear market in 2022 because of this, right? So, hey, Sam, why are stocks at all-time high today? Well, because the sentiment has changed. Now rates are half of what they were about a couple years back. Now we're injecting $30 billion into the bond market, right? We have QE. QE is literally the thrust of the market going up. And the thing is, the market will buy stocks in anticipation of it happening. So it doesn't have to actually happen. It's the anticipation that it's going to happen. And we knew that we were going to get more QE in the next couple of years. We knew because Powell was there and all the Fed presidents were looking toward being dovish and they wanted lower rates. Like you only had two dissents in the Fed during the last quarter. It was Waller and it was I forgot the name of the other guy, but they wanted lower rates. The other 10 were like, let's keep rates stable. But like they all wanted lower rates the last meeting, right? So rates are going lower, but that's not what makes stocks goes up. What makes stocks goes up is printing money, turning on the money printer, buying treasuries off the open market, buying mortgage-backed securities off the open market. That's what makes the market boom. So everyone's like, last meeting, oh, we're good, guys. The Fed is going to keep on cutting rates, right? Terminal rates are like 2.75% to 3%, which is good, but they're going to continue injecting more liquidity in the system. They're going to continue QE. And look, hey, Steve Hassett is going to be the chair, and he's a dove, right? Oh, no, he's not going to be the chair. Okay, Rick Ryder is going to be the chair. No, but he's a dove, so it's fine. You know, but like these were doves that were basically being priced into the market. If you looked at the poly market, you saw like the biggest doves being potential as the Fed chair. So it was like market's like we're good. And then last Wednesday, Warsh. People are like, who in the blazes is Warsh? Warsh is not someone who really focuses too much on rates, which I said arguably is not the most important part of it. Warsh is focused on keeping the balance sheet in check. Now, what is the Fed balance sheet? We have 8 more minutes for me to go. I apologize, guys. I'm not going to be able to do the rest of the segments on here. I'll probably just stream that later on today. And I'll go over everything and I'll take more time to actually do a stream. It's probably going to be a night stream. So, but it will be time irrelevant. So it won't even matter. But anyways, going back, Warsh wants to keep the balance sheet in check. All right. And when I say balance sheet, I'm talking about how much debt, or not how much debt, but how many securities or assets does the Fed own, right? And I don't want to bring up the chart to get too technical or anything, but well, right now the Fed is buying $30 billion of treasuries on the open market, right? So their balance sheet is expanding. We had a massive balance sheet expansion from 2020 to 2021. Liquidity was freely available, right? They were printing money. They were buying $120 billion a month. It amasses some crazy amount. And like, yeah, it decreased a little bit when they let it roll off the balance sheet, but like nothing dramatic. Warsh does not want to do QE anymore. That is not his goal. He wants to cut rates, but he does not want to do QE. Now, arguably, cutting rates is bullish, but not doing QE is ultimately what the money printer is. Warsh he's not in favor of it as of his most recent interviews that he had. But Warsh is basically Fed independent from the government. So there's a bit more that comes with that. I don't want to get too much into it, but let me tell you something. When you have monetary expansion, when you have balance sheet expansion, when you have the Fed printing money into the system, crypto goes up. Global M2 money supply is highly correlated with crypto. What is M2 money supply? M2 money supply is the amount of money in the system, right? And the US is the largest printer in the entire world. And when the US stops printing money, global money supply, M2 money supply, slows down or goes down. And when that happens, crypto hates that, right? And why does crypto hate that? I don't know, but it's been proven that there is a massive correlation between crypto and money supply. And like I mentioned earlier, the market moves in anticipation of an event, not when the event happens. Because if it waits till the event happens, you wouldn't have nat gas down like 20% today, right? Because the storm happened. Everyone knew the storm was going to happen. So like they quickly bought nat gas. The storm happened. And now it's sell the news, right? The market does that almost all the time with certain equities, certain commodities, and so on. But that's what we're seeing right now. So no more QE, which means that there's less dollars or scarce dollars in the market, which means that the dollar is actually a bit more important than people think, right? So when the dollar goes up, gold and silver go down. Why? Because the dollar, the price of gold is a pair of the US dollar, right? So the higher the dollar goes, the more gold goes down. It's an inverse correlation. The higher gold goes, the dollar goes down, right? But dollar moves based on the economy, but also based on, the gold moves based on how the dollar is usually for the most part. If you're no longer adding liquidity into the system, that means people are going to be like, well, I want to hold on to my dollars now because it's going to be pretty hard to get more, right? Like that's ultimately the end of that part, right? And if that happens, people will be like, dollars are more important than gold. Well, let me sell all my gold and buy US dollars. That's the reason why gold and silver are going down dramatically. Now, when everyone goes on one side of the boat, and everyone rushes to the other side of the boat, that's when you get these dramatic 30% moves on silver because it's just, everyone goes from one side of the boat to the other side of the boat. By the way, I apologize for the quality of the camera because I'm on my webcam right now. So that's probably the reason why, or that is the reason why. So crypto is going down, gold is going down, silver is going down. Are stocks supposed to be up? Stocks don't like that. Stocks do not like non-monetary expansion policy. But here's the good news. We're in the middle of an AI wave. So you kind of have that like little bit of a battle. But you could see it in the markets today, right? So let me pull up the charts here, right? So the Qs are notoriously, in the Nasdaq, you have a bunch of companies that need to borrow money to expand profitability and to reinvest in itself or buybacks, whatever it is, and to expand growth and so on. You have the Nasdaq is the Nasdaq 100 tech stocks, right? And tech companies borrow a lot of money. So if tech companies are not incentivized to borrow money, so you have rates that are not as high, or you have less, banks are unwilling to hand out more money because of the fact that they're not printing money at the Fed, like this scarce, remember what I said, scarce money, or the dollar goes up, the Nasdaq goes down because that means that companies will not be able to, not can't, because that's not right now, because the Fed is printing money right now, will not be able to borrow as much money at low interest rates. So models that analysts are doing and big hedge funds are doing, because ultimately that's going to really move the markets, are saying, hey, so we were supposed to be printing money 2 years from now. And now that Warsh has become the FOMC chair or the Fed chair, we won't do that. So maybe we're not going to see as much free cash flow expansion as we are supposed to see on these pre-revenue companies 3 years from now. And that's why these stocks get sold. That's why high beta gets sold, because high beta companies need to borrow money to grow and to reinvest themselves and to expand free cash flow, right? If that doesn't happen, stocks go down because people lose confidence in stocks and they don't want to own that. They would rather own treasury securities. And this is the reason why. Oh, it's actually not up. Oh, this is the weekly. My bad. This is the reason why TLT isn't falling off a cliff anymore, because you have the brighter side of owning treasuries now, right? So if the stock market goes down 5% in 10 years, I should probably own treasuries, because then I'll make like 3% instead, right? Like that's the way that these big companies think. Like they're not going all in treasuries, but like they're less incentivized to buy risk assets for that very reason. Now, we don't know if that's going to happen, but that's just the thought about it. And you look at here today, if I go to commodities, right? You have nat gas is down. Wow, 25%, right? But this is more to do with the storm situation. But yeah, you have gold made a massive down move yesterday, right? You have copper down, but arguably still up a lot. You have silver just down a lot, right? But, you know, other side of the boat, they run at the other side of the boat situation. So like, that's why it's so extreme. And that's also the reason why software stocks are selling off mostly. A lot of it has to do with the fear of AI, but also software stocks have stock-based compensation. And wow, DocN is up 7%. That's crazy. That's the reason why software stocks borrow a lot of money, because they're usually not free cash flow positive, or they're usually heading toward it, but they need to issue a lot of SBC to keep top-notch engineers to continue work for them and produce good software. That's the reason why software stocks get sold, right? So I'll get a little bit more into that later. It's already 12:30, but I mean, not everything is going up, but there are some things that are going up crazy. You have the semiconductor theme still doing its work, right? Oh, wow. Phototronics is back at $36. That's cool. Yeah, SanDisk is up 14% because this continues to be constrained. TSM is up 3% because you do have to do more of the onshoring. I would actually say that today's Indian news is actually very bullish for this. Texas Instruments obviously had really good earnings, and I believe On Semiconductor is green today, which is great. That's a big holding of mine. ZETA, unfortunately, is a software company, so you know you're not going to get a lot of love. So yeah, I'm no longer reading that buy that I did this morning, also yesterday. But it is what it is. I'm bullish as hell ZETA. Sorry guys, I'm just bullish ZETA, and I'm not gonna feel bad about it anymore. I'm going to keep buying ZETA. I'm so bullish ZETA. So yeah, we're going to get a little bit more into that. Obviously, Palantir earnings are after hours today, so that's going to be a very big one. I think there's a few more companies reporting earnings today, but Palantir is trading down here, 147 coming into earnings, so that's going to be interesting to watch. I will not be streaming the earnings. Amit is going to be streaming earnings, so I would suggest tuning into that to find a lot of insights. I'm pretty sure like him and Arnie and Couch Invest, all those guys are going to be streaming that one. So yeah, guys, let's go. Do I think the market's going to go from here? I don't know, man. This hurts. Hood is a decent sized position of mine, so this hurts. But I mean, hey, Amazon is up today, not as much as earlier, but it is up. So you know that's cool. I'll take that. Amcor is now red. Yeah, Lemonade is back at $80. That sucks. Hasn't really been the best last week. So guys, I'm hurting there right with you, and I will be there. I can't hold your hand physically, but I will hold your hand digitally. And it was great meeting all of you guys who I saw last Sunday, and I would love to see you at the next one. It's going to be doing it in Los Angeles. I will definitely be there. I do live in Los Angeles, and he's supposed to be doing a UK one, and I want to go to that one too. So it's really cool to see all you guys. What's my average on ZETA? I'm still green on it. I think I'm like sub 17 average, or maybe like 17 something. So I'm still green on it, but like You can't scare me out of this thing. I'm going to hold it. I've already made that the commitment. People are asking about Rubric. I'm still bullish Rubric, but like I'm not adding to it. And you know, you can't win them all. But software is not in love. Like this is egregious. But you know what? It doesn't matter how good a company is. Doesn't matter. If the stock market hates software, they will throw the baby out with the bathwater. And to be honest, I think we got to wait and see what the earnings come up. But I would really keep an eye out and read more about Warsh. I'll get more into the physics or the basically how the monetary system works. Me and Chris are actually we're both very heavy at macro. It's a very interesting concept, actually, just the way that money works. There's like plenty of books and knowledge online regarding how money works. There's actually been a lot of publications about it. Also, I mentioned the Ray Dalio about his super cycles and so on. I do think we're in a super cycle right now with the monetary system. But I think that if it wasn't for ChatGPT coming out in that moment, we would probably still be in a bear market. So we have AI to save us, and it's only going to get better. But we have a lot of uncertainty that comes with the debt. And if we're going to be getting a Fed chair that is looking to reduce the debt of the balance sheet, that means that you have more tightened liquidity environment for the market. And that is not bullish stocks. So I love it. I think I'm in a lot of stocks that I think will benefit the most off of AI. At least right now, I have a massive position in semiconductor and energy. I'm looking for a position in battery specifically. So EOSE is something that's on my radar, and it's run up quite a lot. EOSE is actually, yeah, it's at $14 still, so it's pretty up there. I think I'm waiting for like EOS to come down like below $10. Then maybe I'll like consider starting a position. But a nice fellow was talking to me about Kraken robotics. That's an interesting one. But yeah, I'm going to take the time to like research this with you guys later on today. Just like dig into it, and you'll get a little bit inside of my process. Obviously, you know, I'm not gonna be able to do everything like 2 or 3 hours because there's a lot I got to cover, but like kind of the gist of it of like things that I look at when it comes to that. So yeah. And also the last one is ONDS. That's actually a very interesting drone play. I do favor Kratos more than ONDS, but ONDS wasn't this thing down in like, oh, it was always up today. Interesting. Yeah, I got to check that one out. But yeah, hey, great meeting you. Great meeting you, sir. Looking forward to the next one, guys. So no one's going to talk about Satoshi Epstein rumor. It's a rumor. There's nothing else to talk about. It's a rumor. And Wikipedia is not fact. Twitter is Wikipedia. Always trust, but you can trust, but always verify. All right. So anyone who's a Palantir share, what's going on? Dougie Dallas. I know it's Dougie Dallas. I know, man, but it was great seeing you. I actually got a bunch of pictures from last weekend. I'll show that to you guys later on, but it's gonna be a pretty cool thing. That's probably gonna happen after midnight tonight, Eastern time. My kids go to bed around 9:30, so that's gonna be cool. I'm gonna see if Chris is available. That'll be awesome to like share that moment with you guys. But yeah, guys, lots of cool people that I met yesterday, and super humbled to really like. Well, one thing, I mean, I met a lot of people that like that are very wealthy, and it's because of the community, and that's amazing, and it's amazing community to be a part of. Not gonna lie, I wish there were a couple more zeros after my net worth, but I saw people with a lot of zeros, and that's amazing. You guys are doing great, and what's great is that like I don't think I've spoken to a single person there that was like a straight up a-hole or mean or like condescending of other people. Like I didn't meet anyone that was like that. And I love being around that. It was awesome. And people very genuine, people very authentic and sympathetic and empathetic and everything. And, you know, heard some crazy stories and everything. And shout out to Quant Tesla. I forget exactly what her avatar is, but I heard a plane crash and I actually met her for the first time there. Yeah, it's June. It's a shame you didn't go. I would have been cool to meet you, but I'm sure I'll see you at some of the future meetups. But yeah, no, it was a cool event. It was very heartwarming, and I mean, guys, you're the reason why I do this. You're honestly the reason why I do this. And looking forward to doing a lot more. All right. So best of luck to Palantir shareholders, and good luck today. It's going to be fine with Palantir at the end of the day. But if software is not loved today, which it doesn't look like it is today, we saw last quarter, Palantir had really good earnings and the stock went down anyway. So I can't really say what's going to happen today because I thought Palantir is down like 30% from its all-time highs. So I don't know, maybe the bleeding is going to stop, but I think it's going to take a lot more than financials, guidance, and everything to bring the stock up. I think you're going to have to flip the sentiment when it comes to software for this to work, for it to continue working, because it's worked. It's worked. Palantir is Palantir. If you look up software AI in the dictionary, you're going to see Palantir. Like it is the software. It is the AI, the software of AI, right? And NVIDIA is the hardware of AI, right? So you have those two parallel themes. And if software is not in love, it's going to hit Palantir. So how's that going to work after hours today? I don't know. I'm not going to guess. I'm not betting anything. I've cut a lot of the degenerate stuff, so can't be there with you. Yeah. Thanks, man. I really appreciate it. I really appreciate meeting you too. Yeah. It'll be cool to go to the London meetup when that happens with the family and everything. But all right, guys, take care. Good luck today if you're in Palantir.